Hello and welcome. Yesterday, both the European currency and the British pound extended losses against the US dollar. Moreover, the euro plunged to the low of 2020, the level posted amid the start of the pandemic. This means that the market participants are highly concerned about surging inflation, geopolitical tensions, as well as massive supply chain disruptions. Besides, worries are growing to the worsening epidemiological situation in China. Against this background, traders are ditching risky assets. As for fundamental factors, yesterday the United States reported data on consumer confidence. The index nudged down to a reading of 107.3 this month from a slightly upwardly revised 107.6 in March. This indicates that the US economic recovery continues. Investors expect the US Federal Reserve to take a more aggressive approach to monetary policy tightening. As a result, the US dollar gained value. Today's macroeconomic calendar is bereft of any important releases. Nevertheless, market players may take notice of statements by ECB members. The focus will be ECB President Christine Lagarde's speech. Traders hope to receive some clues about the future of the central bank's monetary policy. As you know, the European Central Bank is moving ahead with plans to end its bond buying program in the second quarter of 2022. This suggests that the regulator may lift interest rates as early as in the third quarter. However, these expectations do not support the euro. In the second half of the day, it's worth paying attention to statistics on the US trade balance and wholesale inventories. However, these reports will hardly have a severe impact on market sentiment. From a technical point of view, today bulls will strive to protect the area of 1.0633, the 2020 low. Thus, I recommend focusing on this level. If the price hits a new low, then returns to 1.0633 and forms a false breakout, a strong buy signal will be created. In this case, the euro will have a chance of recovering to 1.0664. If the price is able to consolidate above this mark, the euro will continue its bullish run, heading for 1.0697 and 1.0736. In case bears are able to protect 1.0664 or bulls showed subdued activity at 1.0633, the volume of short positions will increase. Thus, the euro-dollar pair will extend losses approaching 1.0605, 1.0572 and then 1.0527 at the levels of 1.0527 and 1.0572, it will be possible to go open long positions with a view to catching an intraday correction of 25-30 pips. Speaking of the British pound, it can be seen from the trading chart that market participants continue to react negatively to any downbeat reports on Britain's economy. Moreover, I have no reason to believe that the situation will change in the near future. Probably if the price returns to 1.2590 and tested from the bottom up, I bet a buy signal will come. In this case, the pound sterling may well rebound to 1.2634 and then 1.2684. At the level of 1.2684, it will be a wise decision to go short on the rebound, counting on the intraday correction of 25-30 pips. Short positions at 1.2634 and 1.2590 can be considered only in the event of a false breakout. Indeed, the British pound is extremely oversold and technical indicators point to the need for an upward correction. Nevertheless, the pair is just gaining downside momentum. Thus, the best way to make profit is to sell the pound-dollar pair amid corrections. A false breakout at 1.2590 will make it possible to go short. It will be lead to a slide to the levels of 1.2528 and 24 1.2884 and 1.2840. At the mark of 1.2484, it will be possible to go long on the rebound with a view to catching an intraday correction of 25-30 pips. Long positions can be 1.2528, can be considered only in a case of a false breakout, as counter-trend trading is too risky. Good luck.